Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with my co-host Kevin Casey, and today we are joined by Bob Simpson. How are you, Bob?
I'm terrific. How you doing?
I'm doing just fine, thank you. We're going to start with a few announcements. First of all, we have a busy week as usual, always something coming up in the horizon that could, throw interest rates or mortgage-backed securities or anything off their mark or make it better. So you never know.
Never know.
Never a dull moment, right? Okay, so tomorrow, that would be Wednesday. We have mortgage applications and new home sales. Thursday, we will have durable goods, GDP Q2 final read. We're going to have initial jobless claims and new home sales. And then Friday, we have PCE, the Fed's favorite measure of inflation. So that should be interesting as freaking always, right? So they're expecting headline PCE, which is not, by the way, what the Fed looks at in particular. They're expecting that to be up 1/10, which is very moderate, right? They think that the year over year will fall from 2.5% to 2.3%, but we know that the Fed focuses on what, kids? Core PCE. And what do they want it to be? 2%. Where are we today? 2.6%. Hey, that's down big time from where it was even a year ago. So they're expecting that, though, to go up 0.2 to 0.24 month over month. And they're expecting the year over year number to go to 2.7 or 2.8. So they're expecting core PCE to rise a little bit because last year's number that we're replacing was so low.
So low, yes.
The good news is it sounds like the Fed understands all this. They understand that we're replacing a really low number from last year. They're expecting something of this, so they were expecting all this, and they still lowered the Fed funds rate by what, Kevin?
50 basis points.
50 basis points, baby. All right. So that was great, right?
That was good, but we expected it. So.
Mortgage rates plummeted after that, right?
Yeah, they went up, they went down a little bit.
Oh, nope, they didn't. So, as expected, they did not go down after, because again, all of that was built in, right? We all had this expectation of a 50 basis point cut.
Yeah, that part was built in. Then they went up, then they went back down, and then they.
The 10-year to this morning is like 3.7. It's like going back and forth between 3.74 and 3.75. So, basically it had no effect on our market so far, but we know that this was the start because they are forecasting another 50 basis points this year and 100 next year. So, just briefly, I just want to go through this. So the next Fed meeting is November 6th and 7th. They're expecting 25 basis point cut. December 17th and 18th, 25 basis point cut. They're expecting the unemployment rate to be at 4.4 by the end of 2024. And they're expecting GDP, which is currently at 3%, to go to end the year at 2%. And also, by the way, to stay at 2% for 2025. So they are also expecting that by the end of 2025, that we will have core PCE at 2.2%. So they had indicated
only 2.4, but their goal is 2.
Okay, no, 2.2%. So
okay,
yeah, so that's their goal. But
can't they just call that close enough?
What?
So
what they're looking at is our trajectory, right? They're looking at the fact that we are headed in the right direction. It is not it's not an overnight thing, right? We don't want the bottom to fall out of everything, and then all of a sudden, everything goes to HE double toothpicks and we're all in trouble. So again, they're expecting 2.2 by the end of 2025. They know all that, and yet they still did 50 basis points. So they also indicated, Uncle Jerome, he said that they don't see a recession coming. They think that spending and growth are resilient. I mean, we can argue who's spending what on what, because maybe the higher end products are propping up some of these numbers. But they also are saying that we should not come to expect 50 basis points at a time, although there was one Fed member on the dot plot who wants a 75 basis. They want to drop another 75 basis points by the end of the year. There was only one of those, though. So anyway, and then they also acknowledge that our shelter readings are elevated in these inflation numbers, and that they're not necessarily reflective of the market, and that it's going to take a little longer for them to get into the inflation numbers we look at. So what else? They think the economy's still solid. Do you guys think the economy's still solid? Do you,
Well,
Bob? Is the
compared to
economy
other countries?
what?
Compared to other countries?
I
We're-
don't know. Compared to us. Compared to
I, you know, I've watched us. Everything that happened to us didn't happen in a vacuum. We don't live in a vacuum. The European Union had inflation. Germany, France, Christine Lagarde, European Central Bank, she reduced their interest rate 25 points, then 25 points. So she came down 50 basis points, but 25 at a time.
Yep.
And everybody's been kind of wrestling with the same thing. Output's good. You know, I don't think you can effectively make a case that we're just about to fall off a cliff. There are a couple things that worry me, but I think everything's basically pretty strong.
Yeah. So they also indicated that they're going to continue with the QT, the quantitative tightening. That's when they're just they're not buying more mortgage-backed securities. They're allowing the runoff to happen. So again, and again, the other thing too, we saw in the last BS jobs report that BLS, that the unemployment rate went from 4.2 to 4.3 to 4.2. So it went down, but literally it was like 300 of, if you really broke down the actual numbers and took the decimal points out to where they belong, I mean, it was a minuscule change in unemployment. So it's not like unemployment got better. It was literally a function of the way the decimal point works and how that feeds into the reading. So again, they're expecting unemployment to be at 4.4% by the end of the year. So it's not like that's going to move the market for them. If it goes over 4.4%, I would think that they would start paying attention, right?
Yeah.
So, yeah. So I think the whole thing is interesting. It sounds like we are not in, they don't think we're in trouble at all. I think they feel like they've kind of nailed it. And,
Well, I thought I heard Elliot Eisenberg speaking last week to the mortgage
yep,
professionals. And his quote was, the mortgage industry is on its way out of its recession.
yes. Hallelujah, right?
Yeah, but he felt that the economy was heading towards a recession, but it wouldn't be our recession. We would be benefiting from it. So
that's a great point. Thanks for bringing that up because I had forgotten about that. And that is something that's good. And that kind of feeds into what Bob was talking about with me earlier. He was just at an MBA, or he is at an MBA conference. And so give us the reading or the pulse from MBA right now, Bob.
Well, I think the session that I would mention was Bob Brooksmith, the MBA chief, did a panel with Ed Pinto, famously coming at it from the right, David Dworkin, a little more from the left, and Tozer, Ted, who headed up VA, and Ginnie Mae, asking him about, where we are and what's going on. And that's a pretty good panel to get this kind of read on, because all three of those guys are passionate, yeah, but metrics based. They're all coming at this from how can we measure this? And pretty interesting things they said. They don't think that the election is going to have an effect on us, because they said the issues that affect, like, our shortage of housing really are state and local regs and barriers to construction. But interesting input from those guys.
Well, but that is exactly what we are hearing from every economist that we speak with, is that the presidential election is unimportant when it comes to housing. It's really not going to drive things one direction or another necessarily. And so, focus on, make sure you're voting though, because those state and local elections are really important. And we've all learned that judges are very important. So we really need to show up and still be in touch with what's going on in general. So anyway, and yeah, I mean, when I look at it, yeah, it's a tough one. Like, so at least, but we will see differences, right? So if we have one side, then it'll be business as usual with the CFPB. If we have someone else get in there, there will be some changes. So, whether they're good or bad is yet, well,
The universal sentiment was to get rid of LO comp. That was the universal sentiment. That
Wait.
rule has got to go.
Wait, well, and you know the CFPB is not going to get rid of LO comp. That's like the
No.
basis of their whole framework. And it drives me nuts. You know, it was funny. I was listening. Well, it wasn't really funny. I was really pissed off, actually. I was listening to this conversation with a bunch of secondary C-suite guys, people who get a paycheck no matter what happens every day, unlike LOs who work, and we get paid when we close a deal. So they were talking about EPO, the EPO rules. And oh my God, this infuriates me because again, they get a paycheck. They go to work, they get paid. Doesn't matter what they do, doesn't matter whether it's good, bad, whatever. They still get a paycheck. And they are very indignant about the idea that anyone other than us, the LO, should pay for an early payoff. And to hear them talking about how, well, you know, we have invested a lot of money into these loans and we expect to keep them and we expect a return, which I get it. I get it. But it's a complete lack of awareness of the idea that we put years into the relationships. It takes a long time for some of us to nurture those relationships. And you go to close a loan and then you have no control over what is happening on the other end. Yet we are the ones who are expected to give up our commission. So anyway, drives me crazy. So again, the more we could talk to each other and they would hear that perspective. And again, the regulators, I'm like, they don't want to have prepayment penalties on these things. But why wouldn't you have a prepay for as long as an EPO would last? I don't understand.
What other industry do people lose their wages or
Yes.
their income
Yes.
for no control that they have? I can't see any other industry where, oh, pilots, if your airplane was late on the next flight, oh, you didn't get paid on this flight, like, wasn't my fault.
Yep. Yeah, when it goes down, their next paycheck still arrives. Anyway, okay, that's a whole nother thing. So yeah, that is it. There is a disconnect often from the people who are actually on the front line of this business and the people who are making the decisions who have no connection and either no experience or no memory of what it's like to be in touch with the consumer and to be carrying the weight of a lot of this. And especially because the last time we had tax cuts, do you remember that those people who are on W-2s lost the ability to deduct any business expenses? Remember that?
Yes.
The fact that every trade organization hasn't made that the cornerstone of what they want to solve for.
Well, but that might be going away because that
okay.
was part of that thing a few years ago. Are you leading right into that?
Yep. Go. You tell them. Remind it because I had forgotten.
That law expires in 2025. And so I haven't heard either candidate talking about it. So, the ability to not write off interest on your mortgage over $750,000 loan amount, all those rules are about to expire in 2025. And I'm not hearing anyone rushing out to renew them. So I don't know. It's going to be interesting.
Have you heard anything about that, Bob?
No, I've not stayed.
Changes?
Not stayed up on that one.
Until Kevin said that, I completely.
Yeah, unfortunately, it's not till December 31st.
Of what?
Yeah, of 2025.
Oh crap! I was thinking it was January.
I was hoping it was January 1st, but no.
I'm way less excited now because
we got some time. Wait to be excited about it, but still.
They have plenty of time to get on board with all this. So, oh yeah. But again, it's interesting. It's not even being mentioned in the conversations. Okay, so I thought this was.
I think that's my primary voting.
Oh, tax cuts or not?
Yeah. If I heard either one of the candidates saying one way or the other, I'm like, I'm going with that.
Yeah, crazy. So I thought this was interesting in Rob Chrisman's Chrisman commentary, which were part of the Chrisman commentary lineup. So yeah, I encourage everyone to check into that. So there was a comment, I think that with regard to the significant cost of regulation, the industry needs to change the rhetoric from things that cost lenders a lot of money and don't add anything to revenue to things that increase the cost of a consumer's loan transaction. And I'm like, amen. I have been screaming this for years because again, all they talk about is, oh, are we making money? Which again is super important. Of course they need to make money, but I keep asking what's on your P&L? And in the last year, we've learned things like, private airplanes that they drive to go have dinner with their buddies across the country in are on those P&Ls. And so when I'm hearing them say, oh, the average cost for a loan has gone, is at 13 grand or whatever crazy number it topped out at. I'm very, I have no sympathy, right? So
Mhm.
the good news is IMBs have started making money, most of them. There's still, what was it, Kevin, a third that aren't making money still, but most have returned to profitability and the cost per loan has come down big time. But again, I'm like, please show me your P&L because I bet I have some ideas around that. So, okay, so Bob, let's talk a little bit about your background, shall we? You were a loan officer many moons ago, so you have experience with what we do on a day-to-day basis. Although let me tell you, it's changed so much. It's
It
all
changed so much
different.
from 6 months ago.
Oh God, it's like a whole different ball game every single day. So yeah, always a new adventure. Let me double check. That could have changed. God only knows. So you started as an LO or you were an LO at some point, and then you are an attorney by trade, like you're, yeah. And
Yes,
then
I am.
you really turned to compliance at some point, right? That's your focus.
The arc of this goes, I spent 10 years as a loan officer, actually always a broker, never even worked for a direct lender.
Wow.
The days of paper files. And
Just
so about 10 years of doing that, and I joined a law firm specifically to go after mortgage fraud. I didn't know a thing about being a lawyer, but I could tear the file apart and tell you who probably knew what and when. So I got hired to be the analyst guy, helping a more experienced attorney actually do the litigation.
this was during the meltdown, right?
No, this was back in mid 90s.
Oh, wow.
And then about 2000, I started this company, iMark, that turned into the largest mortgage fraud investigation company in the country, doing investigations for largely the MI companies. But I had 150 people working for me doing anywhere between 1,200 and 1,500 mortgage investigations a month. It was it's just a mammoth enterprise. And so developed this skill of being able to analyze and find out pretty quickly what's in a problem file. And then a couple of years back, I got my anti-money laundering certificate and I took my career in another direction. And now I teach BSA AML compliance, all from a mortgage lender's perspective. There's no bank teller here, no bags of cash. I just deal with the fraud you're going to find as a loan originator.
So just to remind
That's interesting.
everyone, BSA is Bank Secrecy Act and AML is anti-money laundering.
Correct.
It's a topic every single year in our NMLS classes, which we just taught our first live NMLS class yesterday, and we covered this. And so it is something that there's a huge focus on this right now, isn't there? I mean, a shift.
There is.
So let's talk about that, shall we?
Okay.
And it's different than in the past because now it's all can be automated underwriting where it's just computers. You've got the files are all digital, so it's a lot easier to do an audit versus
Isn't
having
it?
to go
Yeah,
go
tell me
to
about
the
that. Is it
well, because
possible?
back in the day, before I became a mortgage person, I actually was an auditor, and I remember going to the B of A vault down on Vine Street in Los Angeles, California, and camping out there for a week while we went through several thousand files, and you just literally open up each file, look for this, look for that, look for this, check your little boxes, just tedious work. Um, it was quite extraordinary. Today, they just go online and they can, bug into your company's system and okay, let's pull up these files. And I'm pretty sure they even can have AI doing a lot of the work before a human being even touches the file.
Bob, tell us how it happens.
So if I'm doing a BSA audit, what I want to make sure, the goal is to make sure that no one gets fined, no one gets in trouble. So let's make sure that you got all your T's crossed and I's dotted. So the requirements to be compliant are you got to have a BSA officer. They've got to be adequately supported. They have to assess risks, draft up your P&Ps, teach it, and audit it. There you go. So you start with the rule that if it's not written down, it does not exist. So I want to see all this in writing. I want to see what was your risk assessment? How do you train this thing? How do you prove that you trained this thing? And, a BSA officer inside of a mortgage company can have other responsibilities. They can do other things, but the advice is just to make sure that they've got enough time to do that BSA job adequately. So somebody from QC or underwriting, the BSA officers I know can tell war stories. They've seen all the frauds, they've seen all the problems, and nothing surprises them. So this is part of that BSA audit, just to make. Then I grab some suspicious activity reports and make sure that they've got a protocol and they're filing them when necessary. A lot of people aren't comfortable writing up those suspicious activity reports. Writing to the feds can make people nervous.
Yeah, no, we talked about this yesterday about this filling out your SAR, and how, usually I, take a quick poll. There's like, most people have never completed one. It's like, at this point in your career, you must have seen something that put the little hairs in the back of your neck go, rise up. So that's when you fill out that SAR.
Well,
Yeah, and when
you're
you do that, SAR, I mean, I've like to stress to people, you don't have to prove it beyond a reasonable doubt. You're not a prosecutor here. You
Right,
just have to say,
interesting.
I smell a rat.
Yep.
And here's the example I use because I come at this purely from a mortgage lender's perspective. If your loan officer was encouraged to do some fraud by a realtor over here, you're okay to say, hey, here's the name of that realtor. We don't like what we saw. You're able to speculate because these reports are your best guess as an industry pro, as somebody who knows this stuff, to say, I don't like what I saw with this group or that group of professionals, maybe CPAs, maybe realtors. You're not proving anything. You're filing suspicions.
Well,
Yeah.
and we were sitting in a room, not sitting, we weren't sitting, we were standing. We were in a room full of mostly brokers, so brokers and broker owners. And when we talk about this, and we're like, you really have to have a designated person who handles this. You have to have a process in place. It needs to be in writing. And you just get very blank stares. And then occasionally someone will say, is there some sort of resource where I can put this together, thinking they can do it themselves? And more, we are trying to emphasize that there are situations where you need to consult a professional, cybersecurity being one of them. Do
Yep.
not try to figure out whether you're in a good place with regard to your cybersecurity. You need to get a professional in there to assess that. And would you say that that's the same with BSA and AML at this point, since they are definitely stepping up their operation as far as enforcement and looking for processes?
FinCEN, yeah, FinCEN in the last, I would say, 12 to 18 months has come out with some proposed rules that are like, hey, I'm done kidding around here. I need you to take this seriously. And that was not the case. Just this July, they came out with a proposed rule to strengthen AML within the lending community. So what they said was, we used to tell you it was a good idea to do a risk assessment. Now they're mandating it's got to be written and your policies and procedures have to be written. So it's not acceptable to say anymore, well, we look out for, sketchy seconds or something. I mean, you have to write out what you think your risks are. Well, and they want formal training of the boards now. Not just any old training, but they want the boards to manage this process, be responsible for it. And the blowback in the comment section on the FinCEN website, the blowback was, hey, we're not AML experts here. We're lenders. The retort to that is, well, you're not IT experts either, but we expect you to hire the right people to keep your data safe, okay? All you guys over 65 are not the IT experts. We expect you to hire good people. This has been the response. We're seeing them up the responsibilities, and again under this rubric of if it's not written down, it doesn't exist. So that goes for risk assessments. That goes for your P&Ps. It's more serious now and rigid than it was in the past.
Well, first of all, most of us, especially a loan officer in the mortgage space, we don't really think of FinCEN as being in our world. And now we're finding that it is, and in more than one way. And just as they're stepping up their efforts, right? And what's a P&P?
Policies and procedures. So sorry about that. I threw an acronym and I hate it when I do that. My fault.
problem. And then
You've been hanging around too much in DC with all those bureaucrats.
My fault. Call me on that if I do that again, would you?
oh, that's no problem. We're just clarifying. So, and then the other thing you said they're expecting the boards to be aware of this rule. What boards? What do you mean?
Now, isn't that a good question? I always assumed that if you own a bank, you have a board of directors, and that is not the case. There are a lot of banks that just shoot from the hip and they have executives and owners, but there's no board. There are a lot of companies that don't have a board. Credit unions do. Credit unions play this close to the vest, and credit unions will have a board. But the admonition that came out of FinCEN was this AML, this anti-money laundering, Bank Secrecy Act stuff is a board level concern. So your board has to be trained or the equivalent, which means your C-suite. Okay. So, and they're specific about that. It's your board or your moral equivalent of the board has to be trained in this.
Moral equivalent. Isn't that an interesting way to put it?
Yeah.
Okay.
Yeah.
So again, we've been, since 2012, I think it was that we as loan officers and mortgage companies were started to be affected by, or impacted by this. And I remember the first time I took this training, I'm like, what? Like it
What's
just,
FinCEN?
it was, well, not just what is FinCEN, but what, like I'm supposed to do this?
Actually, we should actually say what FinCEN is, just to get rid of
So
it.
FinCEN is a couple hundred employees. It's not 1,000. It's several hundred people inside of Treasury.
Really?
So it's an office inside of the Treasury Department, and Financial Crimes Enforcement Network is what FinCEN stands for. And if you want to geek out a minute, it's what's referred to as an FIU, or a financial intelligence unit. And every nation, every non-rogue nation has their own FIU. Okay, so every individual nation has somebody like FinCEN who gets these suspicious activity reports, and then they all coordinate. They talk amongst themselves about where money's flowing and what looks suspicious. So yeah, FinCEN is our FIU. It's within Treasury, and it's not fair to call them the repository of these reports. They're not just a library. They actively work to get this stuff disseminated and to help law enforcement.
Well, interesting. We have the FBI coming on our show in a few weeks, or a couple weeks, or I don't know, sometime in October. So it'll be interesting to hear their take on what's going on with the mortgage industry and fraud, et cetera, et cetera. But it's really important for all of us to know this. So let me ask you this, going back to, forget about the IMBs and the, owners running around the country in planes and spending a ton of money. Let's talk about little broker shops where you got a one-stop shop. You have a broker owner with a couple of LOs. You have, you know what I mean? The smaller operations where their margins might be a little tighter, and they are, they hear this kind of thing and they're like, I got to do it myself because I can't afford it. What do you say to that? And how do they make sure that they're doing this compliantly and that they have protected themselves along with their borrowers so that they're complying with all the rules?
That's an outstanding question. I had a brokerage with 8 loan officers. I had 2 processors and a receptionist, and so I know this battle, right? And there's not a lot in the spreadsheet for things that you think are superfluous. One way people do this is totally ignore it and just risk the fine. It's done.
That's probably the most common method.
It's just unfortunately very common. It's just a bad headline risk if that's the way you handle it. But let me make it handleable. You have a responsibility to have somebody appointed as the BSA officer. So appoint somebody BSA. And to the extent you can inside of a small company like that, here's the issue for mortgage brokers. Make sure, to the extent that you can, that they are insulated from any argument like, hey, don't bust that guy. That's my biggest producer. That biggest producer thing has weight in our industry. That don't make him mad. Don't make that realtor mad. Don't make that builder mad. That has weight. And that is a problem in the smaller shops. In the bigger shops, what you find is a real division where the BSA officer and the investigation, they may be entirely separate from quality control, from origination. They don't even talk, right? But in smaller shops, you have to at least put in the policies and procedures to say that the person in charge of reporting, for example, misrep, mortgage fraud of some kind, is insulated from outside pressures.
Should it not be the broker owner?
I would think it would. I would think the broker owner, because it's the broker owner's name and reputation.
And license.
They're to be qualified, and I think every broker owner I've met is qualified to say, I'm gonna handle this. My second choice would probably be somebody who has a history in quality control or origination. And here's why I say that. I have hired investigators before that came to me and said, I want to join you, Bob, and I want to investigate fraud. And then they would say things like, oh, that person wouldn't commit fraud. They're a cop, teacher, nurse, neighbor, and you would see this gap between, oh, they must be honest, to wait a minute, I can find misrep in anybody's file, no matter what the profession. You can't go into this assuming that we have, I call them virtuous professions.
Right.
You can find these problems anywhere. So I want the BSA person to really understand originations and the pressure that come from it.
Right. And be a little cynical, maybe a little cynical.
A little cynicism goes a long way.
A lot of it goes where, for especially a loan officer where, they get a top producing real estate agent that starts taking interest in them and sends them a couple deals, and then they will push them on a deal. And that loan officer will, okay, I really need this business, so I'm going to turn a blind eye. And I think that's where they get caught. And then they get sucked into, okay, now I've done one, and well, now it's, the FBI doesn't care whether you did 1 or 100. 1 is enough to get you in jail. And so kind of once you've committed that step into the gray area, it's easier to keep you in the gray area from that fraudulent person's point of view. But then they almost feel pressure not to continue the fraud because otherwise the income disappears.
Yeah, that's a great point. I mean, it's a reality in our business. A related kind of story was a lender asked me to investigate a file where the signatures didn't match. These were wet signatures. It wasn't DocuSign. The signatures didn't match throughout the file. And when I got in and talked to the loan officer said, oh yeah, the borrower told me to go ahead and sign these disclosures. They didn't want me to hassle them. It was taking a long time to close. So the loan officer just scratched out an unmatching signature on a bunch of different forms. Well, I mean, we hear no fraud for housing. We know fraud for profit. This was fraud for customer service. You got somebody who's trying to keep the client, realtor, builder happy, but what they gave you was a loan that's not of investment quality anymore. Now you got this, oh my God, I've got unmatching signatures in my loan
file. Isn't that called convenience fraud?
I think that's the new category.
I was talking about this yesterday in the NMLS class, and because again, the feeling that we always had as loan officers, and again, I've been doing this for 35 years in the business, starting as a processor, then becoming a loan officer, we were supposed to protect the client from everything, right? I mean, life is perfect. We do this perfectly. Nothing ever comes up. If something does come up, we're going to manage it before we ever tell you, if we ever tell you. It was this big wall between you and the borrower, trying to keep them insulated from anything that might be slightly unpleasant. And I'm like, those days are over. And we all need to really embrace that. I mean, somebody in the class yesterday said, oh my gosh, well, what do you do about that? I'm like, talk to your client. Like we're talking about just like the compliance issues around how long a file, you take in a loan application, when does it become a file, and you have to do this by this day, and you have to do this by this day. But by this day, you have to have done this. And if you don't, you have to cancel the file. And so, I mean, and when we started doing this, I had the same exact feeling. I'm like, then what? Like, you don't want to do that to the borrower and they're going to be upset. And now I'm like, forget that. Okay. I'm like, call them and tell them, this is not something that you're making up. You're not doing this to make their life miserable. It's not some sort of thing that is fun for anyone. No. It just is what it is. We're following the law. It is something we have to do. Just explain it to them. You can make it not painful. they don't really have to do anything. They're going to receive this notice that, cancels the file out of your system, etc. But again, as loan officers, as realtors, we have got to be okay with having blunt, real conversations with our borrowers so that they understand what's going on. And then we're all on the same page and we're a team. And
Yep.
to that point, a number of years ago, because again, we're raised, never brag about anything you do, and you're supposed to, hide any of your accomplishments. And I finally realized there are times on these loans we are absolutely doing a miracle for a borrower, but they don't know it. They just think that's normal. That's what they experience. That's normal, whatever. You have to tell them, okay, this was slightly out of the ordinary, or I just had the secondary department give me a real break on whatever because of XYZ. The market moved, which we probably can't do too much of these days with all the disparate impact stuff. But anyway, bottom line is real conversations with borrowers, with realtors, keep everyone informed. You don't have to scare them, and but let them know what you're doing, because they all need to have some awareness and be part of any solution.
And the interesting thing about this I've learned is that when you make everything look really smooth and simple for the borrower, they think that that's how it's supposed to be. And therefore, you're nothing special.
They can just push a button to get a loan.
Versus, yeah, I can just push a button and get that. He did nothing for me. Versus when you come in and you show what you're doing for them and the problems you're overcoming, and then you become more referable and you get more business from those clients.
That's right.
It's a very tough job. To be a loan officer is so intrusive. It's hello, how are you? How much do you make? And tell me about your credit. I mean, it's just the world's most intrusive job. And when you have all these customer service challenges that come with it, I mean, a year or two of origination and you're pretty darn good with people at that point. You really develop skills.
We can walk in and ask them anything.
Hopefully.
Anything.
But again, I don't think that everybody is good at that. I think that people hide behind their email and their computers, and especially now you're not meeting people face to face. And it is, I think there still is a disconnect on a human level. And so I think that is something we need to work on. And
I think that's the one thing that's different in this market versus, 10 years ago. Today, when I get the conditions from the underwriter, I tell the client, you need to get me this.
Yep.
Versus before, I would go back to the underwriter and say, why do you need this? Why do you need that? How do we get around this? And how do we get around that? And, how about we not do this? And then I go back to the client with a much smaller list. Now here's a list. Now I do translate it. That's really key. I translate from underwriter talk into human being talk or borrower talk, but I still say, no, you're going to need to get me this statement, and you're going to have to get me that document, and explain to me what's going on with this. And, it's a little different.
Well, there are times where you get some stupid condition. You do have to do something about that, right?
Oh, yeah, I still do it. I still pull out that little way of challenging a condition here and there.
Okay, so Bob.
Yes.
So FinCEN has been very busy in the last 8 years. And another thing that we're concerned about, because we're hearing about it a lot from CPAs, is something called the beneficial owner rules. I'm just going to roll through the basics of it, and then you can, talk about it with us. Okay, so companies that have been created or registered before January 1st, 2024 have until January 1st, 2025 to register and file the initial beneficial owner report. Is it a report?
Information report.
So beneficial owner, this is if you have an LLC, right? So companies created on or after January 1st, 2024 have 90 days.
I don't think it's just an LLC though. I think
Okay.
Corpse.
Corporate.
Yeah, any corp.
Companies created on or after January 1st, 2024 have 90 days to register and file the initial BOI report. Companies created after January 1st, 2025 only have 30 days. So going forward, if you create a new company, you have 30 days to file this report.
So basically, when you file a new company, just file the report as part of the paperwork we file.
Absolutely. Okay, so there are huge penalties if you don't do this. And I'm saying this to the people on the call who have businesses themselves and also to share with your clients, not to give them legal advice, which we are also not doing, but to check in with their CPAs and make sure that they get theirs done in time. So here you go.
And don't wait until December, because all the CP attorneys and stuff that are doing this are gonna be too busy, although you can do it yourself.
Okay. Okay, so ready? As specified in the Corporate Transparency Act, I'm reading this slide from our NMLS class yesterday, by the way, that it was a synopsis of the whole thing. So, as specified in the Corporate Transparency Act, a person who willfully violates the BOI reporting requirements may be subject to civil penalties of up to $500 for each day the violation continues.
And it's now $595, we learned.
Dollars per day. Also, that person may be subject to criminal penalties of up to 2 years imprisonment and a fine of 10 grand. Potential violations include willingly failing to file a beneficial ownership information report, willfully filing false beneficial ownership information, or last but certainly not least, willfully failing to update or correct previously reported beneficial ownership information. So again, this is something that impacts a lot of people. A lot of people have a business entity set up for
Do you
themselves
know what that $500 fine, and it's increased by inflation, so it's like $595 we learned yesterday, something like that.
per day.
Yeah, per day. So what's that per year? That's $217,000 fine.
Quadrillion million a year, for God's sake. Okay, so Bob, what do we do about this? I mean, there's nothing to do, right? You have to do it. I mean,
No, let me put it in a little bit of perspective. Real estate is a really common way for people to launder money. And if people can transfer money anonymously, you know, that's very powerful. I mean, there was so much anonymous money flowing through London 10 years ago that in the AML community, it became known as Londongrad. Vancouver, Washington, tons of Chinese money. New York City, those needle-pointed towers, you know how many of those were purchased anonymously through shell corporations? I mean, it's just Russian, it's South American, it's a lot of drug money, it's a lot of illicit money that bought those anonymously. So FinCEN decides we gotta take action. You can't transfer properties. We don't want anybody transferring properties anonymously. And so what they came up with is this beneficial owner rule where you own 25% or more of a company, or be the controlling interest. You might be a less than 25, but
You're the driving interest.
You're the leader of the tribe.
Like the Ford family.
Yeah, right. So we got to know who those people are before you can engage, and that's why they're doing it. So my best guess on this is, yeah, they set this up with that New York, London, Vancouver kind of thing in mind. That's what they're thinking, and the way that lands on all of us down at this end of the chain is, Lord, look at what we have to do now. You know, everybody's got to file this report, which is all the stuff you would want on a crook if they were transferring property and you had to investigate them and track them down at your addresses and your employment and your, you know, name, rank, and serial number. That's what goes into these things. But that's the motivation for it.
I'm going to ask a really dumb and obvious question, but what if a company sets up a straw owner? That, you know, that makes it a lot simpler. You know, I'm just going to point that, hey, Bob Simpson is my primary owner. I've stolen his ID. I put it in the system. Bob doesn't know that you've done this, and now you've got the straw buyer who doesn't even know that they're a straw buyer.
Maybe you've got an elderly parent. You've got power of attorney. Maybe that they are suffering from dementia or Alzheimer's, and you list them. They haven't been taken off their accounts yet, but you've got them named. Yeah. I mean, this is the type of thing that goes on. I saw one brother
I'm pretty sure the cartel head guy is not going to put his name down on these lists.
Well, if you want some entertaining reading, just pull down those Panama Papers sometimes. They're all on the internet. And when the Panama Papers got from that law firm in Panama got pulled, everybody's name was there. I mean, David Cameron had an account in Panama. I mean, you know, everybody was there thanks to these lawyers that were helping to create these shell companies. Well, FinCEN's response to that has been, yeah, okay, but you're not going to buy New York high rises anymore. We're not letting you purchase properties anonymously. And that's the motivation. That's why they're doing this. To honest people, you look around and go, one more thing to do, one more thing to fill out. What are you doing? And FinCEN would say, oh, man, we got a real money laundering problem. We got to fix.
Well, I heard a legislator one time say that, you know, they know that they cannot stop crime by just passing a law. But what they can do when they pass a law like this is they make it more of a challenge to do what you're trying to do illegally. And by throwing up enough hurdles that it will discourage the criminals from doing this line of activity, and they'll move on to something else. Maybe they'll do something more legal. And that's kind of why they did it. I remember when we were like doing it in the mortgage world, and you know, all the hoops we have to do to get a loan file through the system. And the legislator, and this is how the conversation comes, they go, why are you making us do all these extra steps? And he goes, because what's going to do is anyone who wants to do fraud is going to get out of the mortgage business because it's too much of a pain in the butt to follow all the rules and keep doing it. So they'll move on to do something else.
And yet, that may be true, but think of how much money flows through this industry. I mean, this industry is awash in money.
Yeah,
so
no.
that's why we attract.
There's still stuff going on. There was a case here in San Francisco where a firm, you know, small shop, and they were just, you know, putting together fake documents for all their borrowers, and they're hiring young kids who, you know, didn't know any better, to saying, oh yeah, this is how it's done. Just go get these fake documents here, sign here, sign here. And, you know, and then, you know, those kids end up in jail, but, you know, eventually the broker got busted, but it was kind of a shame seeing some of the younger kids who didn't know any better, thought, oh, this is how it's done.
I've never heard of anybody actually getting away with double funding loans. Every time I see somebody caught for double funding, I'm like, why did you think that was a good idea?
That's a crazy one. Yeah.
It's all crazy. Okay. So you, Bob, had told me about these two mortgage brokers or mortgage people in New Jersey who just got charged, heavy hitters, like big producers. And they're just being taken down right now, it looks like, right? Christopher Gallo and Mehmet Elmas.
Yeah. Yeah, that one just hit the news over the summer. And you have a top producer in this kid Gallo, who's being written up in Scotsman Guide, top producer. He's doing numbers that mortal producers just don't put up. I mean, right. It's just, you know, just crazy kind of numbers. And the way the indictment read was one count of bank fraud, alleging, nothing's proven, alleging that he did a bunch of investment properties as owner occupied. And you guys have been talking here about the relationship you have with your borrowers. You like these people. You are asking them what they're doing with this house or investment, and that's part of the sales process, right?
Right.
And so as an old originator, I just have no doubt that Gallo talked to these people about, tell me about this house. This is, you're going to live there? No, it's a rental. It's at the beach. It's whatever. I have no doubt that there are conversations that happened that determined what this property truly was. Well, he funded everything owner occupied. And so what do you get? Better rates, lower down payment.
Yep.
And if I, you know, if I were one of his competitors, I'd really be mad. I mean, I'm losing business to a guy who's quoting lower rates and lower downs, and I can't get that RE/MAX agent now. I can't get that C21 agent. They love this guy, Gallo, because his rates are always down here. Well, they got him, and there will be a superseding indictment, I'm sure, in that case. But here's a guy who knows everything about our business. He knows everything you and I do about how to originate, and yet he's winning business unfairly through misrepresenting income, occupancy.
This is in the down too is that we are losing all this business to these liars and these fraudsters. And I think, by the way, it's hilarious because Gallo is 44 and you think that's young. So good. That's great.
Everybody's young to me.
Listen to this. From 2018 to October of 2023, he originated more than 1.4 billion with a B in loans. 1.4 billion. So the conspiracy to commit bank fraud carries a maximum penalty of 30 years in prison and a $1 million fine, or twice the gross gain or loss from the offense, whichever is greatest. So can you imagine? He is 44 years old and it's over. Like, allegedly, of course. Maybe he didn't do it, but the fact that he was indicted is not great. And so anyway, it is, and there was another guy too, this Mehmet Elmas. He's 32 years old. He's a U.S. citizen. So anyway, it was.
That's an easy one as a loan officer to find, because if you have a borrower that says they're going to live in the property, and then but they're really planning on renting it out, they usually are cheap on two ends. So they're trying to save money by doing it this way. But then they also, when they go get the insurance, they get the renter's insurance because that's cheaper. And they don't get the homeowner's insurance. And you as a loan officer can see that if you have any intelligence in looking at your documents, and you can see what they've done. And so it should jump out of the page at you when you see that little thing. So.
There's no excuse if you got an experienced loan officer, and you look at the guy's schedule of real estate and he owns 6 properties.
Yep.
And he says he's going to live in the 1,400 square foot beach condo. Really? You got 4,700 feet in the mountains, but you tell me that the little beach condo is going to be your primary. You just, at a certain point, you're smart enough in this industry to go, no, you're not going to live there.
I had one the other way around where the borrowers didn't have any income and they were trying to buy a property, and they were, oh no, it's going to be rental income. We want to do a DSCR loan. And I'm like, but you told me you're going to live there. And they're like, yeah. And I go, well, yeah, I can't do a DSCR loan because you're going to live there. And then they said, well, I have this other shop that says they'll do the loan. I'm like, well, what's the name of the shop? And they're like, it's XYZ Mortgage. I'm like, okay, do you have the loan officer's name? Yeah, so-and-so. I'm like, I wrote it all down. I'm like, that deal closes. I am turning her in, hands down.
Kevin's giving a whistleblower money.
But now the good thing is she ended up not doing the loan.
Yeah.
So, for the same reason I didn't do it. So that was good.
Comment in a chat from Jenny who says, I always say borrowers are not smart enough to commit fraud. I mean, pie chart on as far as how fraud is discovered, most of it is discovered internally at the lender, but a lot, or at Fannie Mae, for instance.
Yeah, no, what were the numbers yesterday? How much percentage of the fraud? Some huge amount.
77% was discovered by Fannie Mae in their internal audits, but a big chunk, not huge chunk, not like 77%, but lenders self-report often, but some of it is the borrowers reporting, which I found really interesting, because if the borrowers are saying this and going, well, I didn't say that, I didn't do that, that's not what I said. I just want to point out that these guys also were fabricating false loan documents, not loan documents. Good God, Kevin, help me here. Loan origination okay, so like W-2s, pay stubs, I'm guessing.
Oh, well, yeah, that's a little tricky.
Busy. And again, to get to the number of $1.4 billion in loans, holy smokes, is all I got to say.
Hey, I wanted to roll back to the FinCEN thing, just an opportunity for loan officers, because we all know which one of our clients had a whole bunch, or even any one S Corp, where you had to go get the K1 to show that they were percentage owners. And you can really think just back the last couple of years, okay, how many of my clients had more than 25% ownership in a corporation somewhere? It's a great reason to just reach out to them and say, hey, just want to make sure you're aware of this new rule, that you filed your FinCEN report, because it's just an opportunity to touch base and let them know you're thinking of them, and then hey, what's going on? Rates is coming down.
Such a great idea, actually. So the also I want to talk about the good gosh, Bob, the insurance thing that you mentioned. So again, just a reminder, so when I've been pricing non-owner occupied recently, it's cheaper with non-QM. The only hurdle you have to get through is the prepayment penalty, but even with a 1-year prepayment penalty, the rate and the terms are better typically that
Yeah.
I recently for non-QM.
And I like a 1-year prepayment penalty. You know why?
Prepay gets you over the
No early payoff, baby.
Yeah.
What's your LTV on those? What can you buy a house for with that?
This is
80.
our refis at 70 to 75, 80% somewhere.
Okay.
Yeah. 80
And-
easy. You can push 85.
They're good.
Can you?
By the way, like the average non-QM borrower has like a mid 700 score. They're really strong. They're usually very strong borrowers. This is not subprime. But what I do is I run the numbers both ways. So I go and run it Fannie Freddie. What would that be? And then I walk them through. Here's the difference. Here's the rate if it was Fannie Freddie, not, just conventional, no prepayment penalty. Here are the terms if you take a 1-year prepay. I mean, in theory, you could.
And there's no prepay on owner occupied. It's only on non-owner.
That's what I know. I'm talking about investment
Yeah.
property.
Yeah, I know. But
Yeah.
you can do non-QM on owner occupied also.
Okay, so specifically, I'm talking about not investment properties. I'm not talking like a rate and term refinance. I haven't looked at the difference between those at the moment, but my focus is on this. And so make sure you're looking at those two, the differences, because maybe a non-QM option is better for them and a heck of a lot less documentation, that's for sure. So it is, if the property cash flows, doesn't cash flow, there are options for you. So just check it out and make sure you're looking at that. And especially since Bob was in a panel or in a session the other day, didn't you say that they're talking about, there are people on that panel who would like to see it where the GSEs don't have second homes or investment properties at all, right?
Yeah, Ed Pinto said he was of the opinion that GSEs should not be involved in non-owner second homes or refinances. And you could have sucked all the oxygen out of the room when you said that. That is not a popular opinion, but I don't think they're leaving that space anytime soon.
Refis. No refis?
No refis, no non-owners. He said, shouldn't their job as the GSEs be to get people into homes? Isn't that their job?
Does he not
Keep them there. How's that part?
When you jack up the interest rates on investment properties, you have now effectively raised the rates of rent.
All rent.
All the underserved and minority people that you think that you should be serving. And so there is a trickle down effect. I mean, I can't make the same case for a second home, but I surely can for refinances and investment properties. I mean, that is ludicrous. And it just shows you how out of touch some of these people are. Okay, so we have somebody asking, how do we hire Bob? Do you have a site? Do you have pricing for a 1 to 2 person shop? Is it reasonable? Can you buy it? There used to be a company that is now not in existence where you could buy policies and procedures. Do you sell policies and procedures? Like, okay, how do people reach you?
What I've designed my services for the smaller shop. It has to do with my history in this thing. And so what I've got for smaller shops is a package that will give you the BSA AML compliance course. So you're fully up to speed. It'll give you certification tests and the certificate of completion. You will get a risk assessment from me for a small shop. So I've thought out all the questions you need to look at to analyze your risk, assistance on filing SARs, and then a formal board training. So you check all the boxes and go, okay, I've got everything I need for $499. I've got it all. Now, the actual PNPs, I leave that to you. There are a lot of them, and that started to feel to me like two things. It started to feel to me like practicing law, and I wanted to kind of step back from PNPs. And the other thing is, PNPs are so particular to the operation you run. What kind of loans? Where? Who's your clientele? The PNPs have to be crafted to your organization, but I give you the framework to ask all the questions necessary to get them drafted up. So I'm here to be the small shop's friend.
All right, that's important. All right, so we'll put your contact information into the YouTube channel when we post it so that people And with that, I can't believe we've blown through an hour. Good God. This
Yeah,
is,
a quick thing. When's our next class? People are asking.
okay. So we have
By the way, we sold out yesterday. That was amazing.
God, and it was so beautiful. That Sausalito class is just a dream. Like you're literally on the water, looking at the bay, the San Francisco skylines over there, and stunningly beautiful, gorgeous. So loved it, loved it, loved it. Every year, love it. So our next class is coming up there's one in Fresno next week. There is another one in, oh my gosh, I'm losing it.
Walnut Creek or Concord? East Bay?
Martinez.
Martinez.
I'm coming up into the East Bay the following week, and then Thousand Oaks or West Lake Village or somewhere down there after that. So just let me know if you are interested in any of them. We talked about, I don't know, Kevin was in charge of this, putting out a flyer with all that on there. So maybe that'll happen. We'll see. And we are very thankful that you were here, Bob. Thanks so much for all the information.
Give
And
it all over there. Okay.
Very enjoyable. Thank you very much.
All right.
it's great. We really, really loved it. And we'll look forward to seeing you again. And guys, we have a lot of good stuff coming up in October. So have a great week. The rates are amazingly lower than they were even a few months ago, but definitely down from the 8% almost a year ago. So there's a lot of loans to do out there. Go get them. No more excuses. You can't sit around in your house going, well, I'm waiting for the rates to come down. That's over. Let's move it along. Go close something. Have a great day, guys.
You guys.
Bye.